There we go. Thank you for that feedback. Hey, we're here. I didn't have the microphone turned on. Thank you, ladies and gentlemen. All right, we're going to start over a little bit. I'm Scott Fox. I'm a serial internet entrepreneur who does know how to use a microphone, I promise. I'm here today to talk about startup fundraising. We're going to be talking about fundraising because it's really probably, in a nutshell, the nexus of all the challenges that early stage entrepreneurs face, right? You've got a combination, of course, of product development and entrepreneurship, but you've also got financials and pro formas, you've got legal, and you've got strategy, and then relationship building as well. It's kind of everything rolled into one, and it's where a lot of early stage entrepreneurs get stuck. So I'm a volunteer. I do this at least once a month here from my office at lunchtime here in Southern California. And this is based on my experience as a serial internet entrepreneur. I've been at this for 20 plus years, building companies large and small. And also, written these books over here, at least the three in the middle. Those are the ones in English. The others are foreign translations. So if you're joining us today from somewhere else in the world, it's great to have you. Thanks for joining us from YouTube or Facebook or LinkedIn or wherever you might be watching this, either now or in the replays. And speaking of that, if you're watching, please go ahead and invite your friends. This is free and fun and friendly. We've got people coming into the backstage to ask some questions. We'll be bringing them on camera. Let me just point out first, this is not qualified legal or financial advice. This is entertainment, really for practice only. Okay, so don't take this too seriously, but I'll do my best to help you if I can. Any specific situations, you should consult your own qualified and credentialed advisors. Also, we're recording this, and it will be here and there and everywhere, as the internets like to do. So if you'd like to invite your friends, please have them come over to my YouTube channel now. And what else? Let's see. Well, let's turn on the chat room. Okay, so the chat room. So if you are on, there it is. Okay, so go ahead if you are on YouTube, especially, I think is where the comments come in the fastest. Also LinkedIn Live, you can post questions in there, of course. We're being preference goes to those who want to come on camera and join us. And I'll put that link up in a second. Actually, let me do that now while I'm talking. That link, let's put it right. Sorry, guys, there's a lot going on here. Okay, let's put that right in the chat room. Okay, if you would like to join me on camera, there's a magic link for you. Okay, and let's see. So we'll be taking questions, doing many of those as we can in the next hour or so. Thanks to those of you who wrote in early. That helps me plan the show. So we'll be taking those questions with some priority. And I think that's about all the disclaimers I can fit into this time. Let me just, okay, looks like the chat's working. That's good. Yeah. Okay, just real quick. This is our email list, blah, blah, blah. Like and share, smash that like button, as they always say. Okay, so let's get going here. Okay, so let's see who's in the chat room. We've got Annie. Welcome to Annie and Gaurav and Daniel and Michael. Great, good to see you all. I guess everybody can hear me now. That's good news. And I'll be taking those questions. I think you guys are the prepared ones. I recognize most of your names because you wrote in advance and sent some questions. So let me see. Let me just, I can't keep them all in my head at once. So if you can turn on your camera, Annie and Michael, let's just bring everybody in for just a second and just give me the 2 seconds remind me what your question is about. Keep them all. And we'll try to, I can try to prioritize them, okay? Annie, you can join us too if you want to turn your camera on. So let's go first. Let's see, Michael, real quick, what's your, just the 2 second, just remind me what you want to talk about so I can put them in
Hey, Scott, not startup funding related, but okay. Lifestyle businesses.
Oh, right. We traded some emails about that, didn't we? Okay.
Yes,
good.
We did.
Thanks for joining us. Okay. Thank you. How about you, Daniel? What was your question about?
Wait, can you hear me?
Yes.
I was basically asking on the financial projections that different like angel investors or even like private investors look for, and how much traction they actually look for on the idea, and if they want to see like LOIs if I'm doing like a business-to-business startup.
Okay, cool. Thank you. That helps me. I'm just trying to get a sense of who's here. And how about Gaurav? Nice to meet you.
Hey Scott. Thanks for giving us this time.
Yeah.
So my question is very basic, and perhaps probably everybody would think that. So what is the best way to reach out to a pre-seed investors and probably get their face time or time to give your pitch?
Yep. Okay, cool. We can definitely cover that. And then thank you. And Annie, nice to meet you.
Hey,
What's your
nice to meet you as well. So my questions are around co-founder. So for like to start a business, like what if like one person have a certain skill set, but like we need another person to have like complementary like skill set, like the technical versus operations. So
Got it.
like what is like the best way to find that person, and then like what kind of like skills or personality to look for?
Yeah. Okay, good. Those all make sense, guys. Thank you. It helps me to know who's here and what we want to talk about. And also let me point out, all right, so I'm going to take you guys off. I guess we'll start with, let's see. Well, we'll try to do this in kind of a logical order. So maybe we'll start with Gaurav, if you don't mind, the rest of you. I'll bring you back in a minute. Let me thank you for the introductions there. And let's adjust this and that. Okay. And if you are watching and you wanted to comment in the chat room, you can do that on LinkedIn Live or on YouTube. And I also encourage you guys to make friends in the chat room. Go ahead and talk to each other. I don't have all the answers. A lot of this can help you to find, for example, Annie's question about co-founders. Your co-founder might be here, right? Somebody who's here with similar interests, similar stage of development and questions. The people in the chat room know plenty as well. So I'm just kind of the figurehead here, the convener, as they say. So let's get going. So Gaurav, if you don't mind, could you repeat the question for the audience, and then we'll get into it. And folks, go ahead and, like I said, chime in the chat room with your suggestions and answers for him as well. Go ahead, Gaurav. And by the way, where are you from, Gaurav? Tell us. Introduce
So
yourself.
I'm from Austin, Texas.
Austin. Okay, cool.
Yes, and our startup is already launched. We have bootstrapped it. Since 2 years, we are trying to get that thing up and running.
Mhm.
Now the biggest challenge is to get in front of the investors
Yeah.
and show them our product. So my question is, what is the best way to reach out to a pre-seed investors? Perhaps identifying the pre-seed investors and best way to reach out to them to get their FaceTime.
Yeah. Okay. So just to be clear, you're not talking specifically about FaceTime, the Facebook visual product. You're
No,
talking about getting
yeah,
face-to-face time. Okay, just to
yeah.
be clear. Okay. So yeah, this is a great question, and it's a hard one because and this is honestly, I like this question a lot. Thank you, Gaurav, for being here, because this is honestly why I write my books and why I do this, because people in this business kind of think that everybody knows how to do these things, right? They often are from the right schools, or they have money in the family, or like a lot of people, it seems like they're like, oh, I'm going to start a company. I'll just I'll talk to my uncle and he'll write me a check and good, we're done, right? And that's really not the way it is for most of the world, and it's not the way I grew up. I'm kind of an insider now, but I started out as an outsider myself. I grew up in inner city Detroit without any money. I put myself through college and kind of found my way, right? And I had a lot of other blessings, obviously. Um, uh, and the trick of finding pre-seed investors is what everybody faces. So this is a great opening question. So my sort of answer would be that it's really about building relationships. The trick is that a lot of people think that, especially at the pre-seed stage, people think about this like a bank, right? Like, I'm going to buy a car, I'm going to buy a house. So I'll show up at the bank and they have certain hours, and I'm going to show up, I'm going to fill out the application, and they will or won't give me the money, as a loan for this transaction. Investing in startups is much more relationship based. It's not nearly as transactional. And I apologize if you know some of this, Garb. It sounds like you've been at it a while, but I'm speaking to a wider audience here just to lay the track. It's really about finding people and building relationships, because at the pre-seed stage, you don't have much to offer, honestly, right? That's why you're pre-seed. Presumably you don't have a bunch of customers. You don't maybe have any revenue. What you've got is a smile and some enthusiasm and hopefully some good ideas and maybe a track record from your previous jobs or school or something. And that's not enough to get a professional investor to invest. Like, for example, if you went to the bank I just talked about, they would deny you because you have none of the things I just talked about. So what you have to do instead is build relationships. And that means, and here's really the answer, is stop thinking about this as a transaction and think about it like dating. You're going to go and meet a bunch of people and figure out who you get along with the best. And then you're going to hopefully, talk them into giving you some money, right? This is like, it's a weird mix of dating and business. And the best ways to do that, to get more tactical, are to go to a lot of events. And we've all been crippled the last couple of years because of COVID, right? And that's one of the reasons I started doing this more online, because it was hard to go face to face and meet people. And we want to, people like, if you've ever had any sales training, people say that they buy from people. People buy from people that they know, like, and trust. And it's the same with investing, and pre-seed stage especially. And that's why my first facetious example was about going to some uncle, right? Well, if he's your uncle, he knows you, hopefully he likes you, and hopefully he trusts you, right? That it's kind of already, the skids are greased there. And that's what you need to develop with investors as well. So I would be looking at events. I would be looking on LinkedIn to see what people are posting about. To see if they're interested in your sector. And a lot of this is really about finding a match between what you're doing and people that invest there already. Like, you can spend a lot of time, and actually I'll be frank, my first startup, I blew pretty much my whole savings, went into debt, and spent a lot of my life trying to educate the audience about what they should be doing, where I thought the future was. And that's a really expensive way to build a business. You're much better off find what people are buying already and maybe improve it X%. If you're going down that route, it's not only easier to sell it, but it's easier to find investors, because you can say, we're like this other company that you already invested in, but better in these ways. And that helps people appreciate what you're offering a lot better. Okay, so is that helpful, Gaurav? Specific enough? No? Gaurav, can you hear me? What's going on here? You guys having trouble hearing me? Okay. Well, hopefully that was helpful for Gaurav. I guess we'll move on to the next question. Sorry, you lost the audio, right? Did everybody lose the audio? Can somebody say in the chat room? Sorry, I'm having trouble here. Yes, you can hear me. Thank you, Maximus. Yes. Oh, there's Gaurav. Okay.
Yeah.
Okay. Could you hear me what I said?
Yeah. Sorry, I lost you for a few seconds.
Okay.
Probably 30 odd seconds.
Okay. Well, of what I said, was that useful, or you have a follow-up, or should we move on to somebody else?
So I think you said that it's all about relationship. Go to events and talk to people and try to find who is the best match for your business. But yeah. I guess my follow-up question is where to find those people, right? When you go to some of these startup events, most of the people are co-founders, and it's kind of difficult to find the investors there. And then, so what is the best way? Is there any forum, any place where we could find investors and we can try to go there and probably socialize?
Yeah. That's very good. You see, that's interesting, Gaurav, because you exposed in me my own assumptions. I've become an investor, so to me it's easy to meet investors, and I forget that those are invitation only for accredited investors. I go to lunches and stuff all the time, right? Everybody's an investor, right? But thank you. That's why this helps keep me fresh too, right? Yeah, you're not part of that club, right? That's the point. Okay, so how do you get in there? Well, I would look for public events. I would look at Meetup. I would look at Eventbrite. I would get on our mailing list. Let me put that one up again here. We cover mostly right now, I'm in Southern California, but we also are starting to cover more national events, which means that you can do them by Zoom. If you have a university in your town, I would figure out, well, Austin, yeah, you've got Austin, you got a great university, right? Mm-hmm. So yeah, find the entrepreneurship group, especially in the MBA program. There's probably at the Macomb School of Business, right? There's probably a club or something that you could at least go to the events. Like it's really a bit of research. And again, what I would suggest is targeting investors who do what you do, not just any investor, right? Find people that are interested in your sector, right? If you're doing space tech or fem tech or real estate or whatever it is, consumer packaged goods, software, like find people that do that, because the conversations will be a lot easier. Because you'll find when you meet investors, they generally, the first couple of questions are, what do you do and what stage are you? Because we instantly are thinking like, okay, is this person doing something I have any expertise in? And then how far along are they? Because I have this much money, right? And I can't I don't have $10 million, so I can't do a Series C. They need to be pre-seed or whatever, right? Another thought as I'm talking here, there are angel groups in almost every city these days. I don't know, Texas, I'm trying to think. But if you Google, I can't think of one offhand, but like here in California, we have Tech Coast Angels, and I'm a member of Tech Coast Angels. I'm a member of the Stanford Angels because I went to grad school at Stanford. Like find your schools or schools that are in your area and like put in that name and the word angels and see what pops up, because those are the groups that you might not be able to attend them unless you're a member, but at least if you find their events, you're on the radar, right? And usually most of these groups that I'm aware of across the country, at least once or twice a year, they try to have, a pitch competition or an awards banquet or something that is more open to the public. And I would get in there and just start showing up. That's the trick.
Makes sense. Makes sense.
Yeah,
Makes sense.
it's
And perhaps this is going to be my last question.
okay.
I want to give other people a chance too. But so normally people talk about the elevators pitch, right? People
Yeah.
talk about how to get attention of the investors. So what is the best way, right? Because sometimes you send the email, you try to make your subject very, very kind of innovative. Sometimes you send an email, you make your subject or your email body very innovative.
Yeah.
But most of the time you don't get any response. So and you being the investor, you would know better than anyone else that what makes people at least scroll through your content, right, which you're trying to convey.
Yeah, that's right. It's a good question, and it's hard. And I have this problem myself because, as you can imagine, when I do these shows and I write these books and stuff, I get so much inbound that I literally can't answer them all. I mean, I could, but it would just be no, right? So it's overwhelming, even with assistants, right? I have staff, and every investor gets that. So the first thing is to not take it personally. Like we're on the receiving end of a lot of stuff, and it's not personal, it's business. We got to keep up with our business, but also with our lives. I have kids, I have other things going on, right? It's not about you. I got to manage my own inbox, right? So don't ever take it personally. The answer to that question is kind of back to what I was saying earlier. You have to personalize. What can you do that will get their attention? That's legitimate, right? Don't do something weird, but if you email me and say, hey, I know you invested in this company and this company. Oh, and I'm friends with this guy, or this attorney, something like that, or even better, I'm recommended. So and so said I should talk to you because he knows that you did deals like this. That's how you get over the fence, right? And that's where most entrepreneurs fall down, because they want this big list. And they're like, oh, here I got a list of 2,000 venture capital firms. I'm going to email them all. And yeah, you're not going to get any response because by definition, you're not going to write 2,000 personalized emails, right? That's not your job. That's not your startup, right? You've got to personalize them. And so I would really think quality, not quantity. And you've got to spend the time up front. Dig into LinkedIn. Go on, I don't know, PitchBook or TechCrunch, or I see some in the chat there about keywords. Like do the keywords about your startup and that firm's name, right? Or other portfolio companies they have, and Google, so that when you write, it still can only be a paragraph or so, but you can open up and it would be like I've just met you, but like say you're the VC, I would say something like, Gaurav, how's things in Austin? I know you invested in this and this, and because of that, I have a startup like this. And it was, our mutual friend, Julie, says that, it might be something you're interested in. Here's some quick numbers about it. And numbers are key too, right? And keep it short and sweet and tell them that you care, right? Again, it's kind of like dating, right? It's not like, hey, want to get married? No, it's like, hey, I know you like coffee. Would you, like to go to Starbucks together, like take it easy, right? And that's what can help. I mean, no guarantees, of course, right? Because the other thing that startups don't realize is not all VCs are investing all the time. This can be part of my next book, actually. It's not like a bank. Like Bank of America is open every day, all day. JP Morgan, they have billions, right? And trillions, maybe almost at this point, right? And they're investing all the time. VCs have a life cycle. They raise a fund, they put a bunch of money to work, and then they kind of go quiet for a few years until that fund plays out, right? So if you hit them at the wrong time of their life cycle, they're not answering anybody, even if you're perfect, because they literally don't have any money to invest. They're waiting for the last fund to come to fruition. So lots of ins and outs here, but that's why I'm doing this. I hope that's helpful. Okay, so we do have to. I hope that was helpful, Gaurav. Nice to meet you.
Nice to meet you too. Thank you.
Good luck with your stuff. Hope to see you at a future event. Okay, so let's bring on some of our other friends here. Let's see who's going to be next. How about Daniel? Financial projections was the next question I saw there. If you don't mind, Daniel, let me just quickly, let's just talk to the chat room for a second here. See if I want to keep up with this. Let's see. Chat says, okay, we fixed the sound thing. Good. Nathan says, can I attract an investor without a business plan or pitch deck? Depends on the investor, Nathan. I mean, if they're a good friend and they know, like, and trust you already, they know a lot about you, perhaps. Yeah. But if not, you generally have to document stuff. If you want people to write you checks, then I think you probably have to do something. Greg, yes, you can ask questions here. How is the current economic situation influencing investors' decision-making process? Lisa, that's a very timely question. It sucks. It's killing them, right? Imagine how much money people have lost in the stock market, including the guy, right? This has been a very, very painful spring for those involved in tech stocks. So I would expect all of you to be more conservative in your projections, lower your valuations. This is what they say in Game of Thrones: winter is coming. Yeah, winter is coming. Winter's here, I think. Let's see, Dwight. Outside of SBA loans, business credit, and waiting for series rounds, for post-seed firms, pre-series A to get funding. Post-seed, pre-series A. You raise another round, Dwight. Yeah, it doesn't matter what you call it. Maybe what you're looking for, they call a bridge round. A bridge round bridges you from one point to the next, so that it gets you from your pre-seed to your seed, or your seed to your series A. But ideally, obviously, you make enough progress in between those so that you can raise a real larger round. Do I have a link to where investors host events or events where to meet investors? Well, I would get on our mailing list there, Hamida. That's the best one I do. Hey, Deval, Winter's here. Yes. Okay. Sorry, Daniel, almost there. Keywords you want to look for: a legitimate or illegitimate group. This is a good point. All right, we'll come back to that, Michael. Daniel's waiting here. Let's talk to Daniel about his question. It's always more fun when we have live people, and Daniel's being brave here to come on here. I'm a really mean guy.
Okay. Thank you. Okay. My name is Daniel. I'm from Chicago, and I'm currently working on a startup that's a blockchain application that focuses on business-to-business deals. And currently, our technology is in the very early stage, and our overall vision cannot be completed without scaling up through funding. So for our pitch deck, and when we go to investors, I was curious on what was the how much financial projections would these investors want to see right away, since our tech is working on a smaller scale and we basically want to scale up. That's why we wanted to hold these rounds. So what would you like to see in financial projections, and how much traction are they looking for on the idea?
Yeah, that's a great question. You're kind of excellent. I'm going to mute you. If you have a question, just wave at me. I'll unmute you again. Okay. That's for the benefit of everybody else listening. Okay, so projections. So projections are a moving target, and this is really frustrating to entrepreneurs, but it's the fact, right? So the answer is, give me as much as you got. That's the short answer, right? Investors are not any different than you. I mean, I used to see investors as this kind of other, right? But we're not. We're just people often older than you who've had some success, who are interested enough to think about this stuff in our spare time instead of just playing golf, right? If you have some traction, that sounds great, right? Tell us about the traction, and then make some reasonable assumptions. You're going to want at least 3 years, maybe even 5 years, but everybody knows that these are compounded assumptions, which is a fancy way of saying bullshit, right? Right? You're just adding assumption on assumption, right? So, but what we need to do is be able to see some sort of, first of all, momentum is really nice. So if you have some traction, awesome. And I'll unmute you in a second. I want to hear more about your company, but we want to see some momentum. And then we're looking at that your assumptions are reasonable, and that just as much as that, we're kind of testing you to see, are you a reasonable person, right? Can you think through, are you smart enough to logically present what you're doing, and that you're not claiming crazy stuff, right? Blockchain, you can claim almost anything these days, right? But we want to see how it's a demonstration of how you think, right? And because at the early stages, often angel investors are investing, the phrase in the business is investing as much in the jockey as in the horse, right? And so you're the jockey, or you and your co-founders, to Annie's point, right? You might have a team. Who are you and how do you think? And what can you offer us to show that you're adults and you're going to spend the money that we've spent a lot of time earning this money, right? So we're not just giving it away. What are you going to do to help us make more money? And we usually try to think of ourselves as partners, right? So if what you're saying with your projections is, can you make reasonable assumptions? What have you done so far? And are you the kind of person that, we think we could work with to help you realize those assumptions? Is that helpful? Kind of big picture, but
Yeah.
Yeah. Okay, good.
Yeah, definitely. Thank you.
And do you have some revenue already, or is this still early? You said you had some traction, but is it cash? Or?
Yeah, no, it's more of just with our technology first, and then just hearing from what other people have to say along the way.
Okay, good. Well, that's where it starts, and that's great. You got to be scrappy about this stuff. The other thing I often say to people, if you listen to old episodes of this show, by the way, if anybody's watching this and you want to hear more of me, which my wife doesn't, but if you do, go on YouTube. There's lots of these, and you could probably learn a lot, I hope, at least by the questions and answers and in the chat. But a lot of people get stuck at this early traction stage, and it sounds like you're doing already the right things, but let me spell it out for other folks. If you don't have any traction, find some. And traction just means demonstration of progress, that somebody will buy your bullshit, right? You're making stuff up. That's your job, right? And that's cool. You're an entrepreneur. But who is buying it? And I don't necessarily even mean cash buying it. I mean, who believes you? What kind of partnerships do you have? Has anybody signed off on this, want to be an advisor? And ideally, you can run some tests. And this is where I'm really going. Put up something, especially if you have a B2C type product or service, put up something using Facebook ads or Google ads or LinkedIn ads, and just see, if you spend $100, can you get $110 back? Cool. If you spend $100 and get $50 back, okay, you got to tune it, but at least it tells you something. You get some idea about the conversion rates and stuff, and that can inform your pro formas, right? You say, well, you spent $1,000 and we got these results with this kind of percentage of conversion, and therefore we think that if we had, $100,000, and those kind of projections are a lot more respected and appreciated than, the classic one is, we sell water. Everybody drinks water. There's 7 billion people in the world. If we get 10% of that market, whoa, we're rich, right? Like, oh, yeah, come on, right? So we need a little more than that. So cool. Well, nice to meet you, Daniel. Thank you for joining. You're welcome. All right. So who's next here? That was Mr. Daniel from Chicago. I guess we're going to go to Michael next. Michael, let me just catch up in the chat room here a minute, if you don't mind. Okay, there's my friend Athena. Hello, Athena. So Michael said, keywords, right? Michael Acevedo. So keywords you want to look for in a legitimate group or an illegitimate group. This is a great point because there are a lot of scammers out there, frankly, right? Especially in the blockchain and crypto space, right? But there's a lot of people out there that pretend to be investors, and what they're actually are is consultants, which means they're actually salespeople, right? And they're looking for early stage entrepreneurs who they can then sell something, right? And that's fine. People are allowed to make a living. I'm a capitalist, full stop, right? But you want to try to figure out, a little Google searching can be very helpful, or a little LinkedIn background profiling, right? Who actually writes checks? Who's a member of some recognized angel group or VC firm? As opposed to some sort of broker, essentially, right? And brokers have a role. That's fine, right? But you only have so much time as an entrepreneur, and I suggest you do research using, like Michael suggests, keywords to find out if people are legit or not, right? So try to figure out what their portfolio is. What have they invested in? Look on Angel List, for example. Just look on Google. Put in their name or their firm's name with the word scam or problem or lawsuit, right? And see what you get. I can tell stories. Luckily, I haven't been caught in these gears myself, but I've had companies I've worked with who've been very excited about term sheet offers they've gotten that turned out to be very strange. and actually ended up costing them money, right? When they were supposed to be raising money, they had to buy their way out of the deal that they signed too quickly, right? So not to scare you, but just be careful. This is adult adult activity, right, with real money involved. Okay, let's see. OC, any suggestions for mentoring youth in tech in Orange County? A 16-year-old who has developed several apps. Like to get him connected with a mentor. Gosh, OC, I think that does ring a bell. I can't come up with it right now. I'm sorry to keep sending you guys back, but I would get on that email list I posted a second ago, the startupeventnews.com, and read the Orange County Startup Council blog. We post everything that happens in Orange County, and there was some interning sort of stuff recently. Go look there. There's a search function on the site. It's at ocstartups.org. Maybe that could help you. Okay, Lisa back with another good question. What's an example for numbers to put? Oh, I didn't know I could do that. Did you see that, guys? That was cool. Look at that. How did I do that? Hold on. Hold on. No, that's not it. That's Maximus's question. Hide. Not that one. Look at this. Oh, cool. There. Now, learn something every day. Okay. So, Lisa, this is a great question. What kind of examples do you put in an email pitch? We're going to get to Michael in a second, but this is actually fairly quick. I would think of an equation, right? Look at your business. What have you accomplished? What kind of numbers can you present in kind of an A plus B plus C plus D sort of fashion? So, the easiest way to do this is to think in terms of like a customer flow. Or customer acquisition flow. So something like the key metrics in this space are generally CAC, which is customer acquisition cost, CAC, and then LTV, lifetime value of a customer. And you try to think about, as I was saying a couple minutes ago, we spent $1,000 on marketing, and we got these kind of results. We converted 200 people, which is a 20% conversion rate. And therefore, if we spent $100,000, we have a 20% conversion rate. And those people bought our typical product, which has an average price of whatever it is, ideally on a recurring basis, maybe monthly. Then that yields revenue that looks like this. And that is growing. We hope that it will then grow by this percentage. So cost of customer acquisition cost that leads to a lifetime value, recurring revenues, and then growth. That's the kind of equation that investors are looking at because, well, that's how we think, right? Like, what have you got? What does it cost? And what do you make? And how often is it going to repeat? That's kind of I should write that down. That's kind of the equation, right? So if you can come up with numbers like that, and you're not going to have them all necessarily, you can make some assumptions, as we talked about earlier. Assumptions are fine. You just got to be careful that you don't compound them like crazy so that they look ridiculous, right? So be reasonable, and that should get you where you need to go. So, okay, so let's bring Michael on. Michael's been very patient here. Let's see. There he is. Okay. Hey, Michael. How are you?
Hey, how's it going?
Good. Nice to see you. Thanks for joining us.
You too.
So remind everybody of your question, the short version, if you could, please.
Got it. Just relating to starting a lifestyle business. This comes from reading your recent book, Click Millionaires.
Okay.
And just wanting to understand, you had mentioned in our email, you still endorse the book. It was written 10 years ago. Do your own research and be careful about pursuing the specific blogging or other strategies from the book. Right. So, today, what trends are you seeing with people building, quote, lifestyle businesses? I have some ideas in mind, but happy to have your feedback.
Sure. Okay. So what he's referring to is this book here. Let me see if I can reach that without messing up my microphone. So this is my third book, Work Less, Live More with an Internet Business You Love. So this was early days of the, like you said, lifestyle business revolution. So I used to have a job. I had a bunch of jobs, and it turned out I hated them all. And I made really good money. I succeeded in Wall Street, and then I worked in the entertainment industry in Silicon Valley. Did very well every time because I worked my ass off, but I hated it. So that's why I do what I do now. I'm an entrepreneur, right? So if that resonates with you, it's the same advice I gave Michael. You might enjoy this book. And I give the money from this to charity back in inner city Detroit to help. I grew up in the city, and I help kids go to college with the money. So this is not a profit grab. And this book is 10 years almost 12 years old now. But if that's useful to you, it's on Amazon. It's in a bunch of languages, etc. Okay, so that's the context. So what that book is about is how to look at yourself and what kind of skills and interests and expertise you have, and matching that with the opportunities that you can find in the market. And as Michael just repeated, we traded an email or two because you came to didn't you come to a masterminds workshop or two? Right. So
Mhm.
that's the other
Yes.
thing we do, guys. This banner up here behind me. Let me put that one up real quick if you don't mind. We do this once a month as well, which is a smaller group where everybody talks. Everybody's on camera. This is more just my lunch hour freebie thing, but the masterminds workshops are fun too, and it's more a group discussion. Anyway, so the strategies in that book I still fully endorse. Michael and I followed up after that meeting because they're about finding what's important to you. And that really isn't taught in schools. And it's really a missed opportunity. The modern industrial society is set up to take everybody right out of school and put them in a cubicle, for 30 or 40 years. And that if that works for you, awesome. I'm jealous. I wish it worked for me. It just didn't. And you can have a very nice life that way, very stable and save some money and do very well. If you're not wired that way, it's very awkward. And so you have to find other things. So I still think that it's really important to look at your own needs and interests in that stuff. But what I was warning Michael about and what he's asking about is that 10 or 12 years ago, the field was much greener, right? There was a lot less going on the internet, and you could start a blog about your personal photography interests or your love of yoga or something, or travel, or whatever it is. And maybe you could make some money on it, right? And you could probably get on YouTube and start a YouTube channel about it, and you could do all these things that really maximized your personal interests and creativity. Of course, it was always easier if you could overlap those with some business interest, like selling yoga services to other yoga coaches or something, right? If it got into business, there's a more reliable cash flow. But in both cases, B2C and B2B, there's just a lot of people online now. So it's a lot harder to do. So my answer to you, Michael, is I still think the personal inventory is really, really valuable. There's some checklists and stuff in that book that you probably read that can help you kind of analyze your own expertise and how you like to spend your time and who you like to spend your time with, all that kind of stuff, to figure out kind of which direction you want to go. But it used to be kind of 50-50 of like, what do you want to do? And then how do you turn it into a business? Unfortunately, these days, it's more like 20-80. You really got to think about the business, because you can spend a lot of time and have a beautiful blog or podcast or YouTube channel or Instagram or all of those and kill yourself, and nobody might even notice, right? Because there's a gazillion people out there, including me, right? Like right now, right? This is live on YouTube and LinkedIn and Facebook. And I've been doing this since 2008, I think, right? So there's hundreds of episodes of me out there. So, and I have it used to be a pretty specific niche. A lot of people do this now. It's kind of a long answer to a short question, but whatever. And unfortunately, I don't think we have time to go into your specific situation today, but I would really look at, how can it make money, which is unfortunately not, if you're quitting your job, your first goal isn't necessarily to focus on that. But if you don't focus on that, I don't think you have the money to keep going with your interests. And you really got to do extra research. The one exception to that might be if you can catch a new platform early, right? There are people who, like, I remember when Twitter first came out, I had friends, there weren't a lot of us on Twitter. And I had one guy who just lived on Twitter all the time and we tweeted everything. Like he tweeted from the dentist chair. I remember like when he's having his tooth filled, right? And he built a huge following. His name is Gary Vaynerchuk, right? And Gary became a huge deal because he wouldn't shut up, right? And he was in early, and Gary's got a lot of talents, right? And he was on my podcast, I think, for my second book, actually, before he was even famous. And people like that, so the point is, if you can catch YouTube when it's new, or Instagram, or TikTok, right? Or whatever the new one is, that can maybe give you an opportunity to leapfrog. But other than that, the social media channels are really crowded. So is that helpful? Or sorry if that's demotivating.
No, I hear you. It sounds like the current channels that have been around for a while, you feel that they're maybe oversaturated, or if you are a new player in there, make sure you're serving the market in a new way.
Yeah. Okay. That's a good way to put it. Yes. A new way. And I'll add to that a profitable way, right? Because that's the trick. My second book This is great. I don't get to talk about my books much anymore, but thank you. This one was a marketing book written in 2008 or so. And back here, the advice in this book is literally go be on every channel, because there were only like 4 channels, right? Like you could actually go on YouTube and have a podcast, and what else was there back then? Email. This is before Pinterest even existed, right? And you could kind of dominate and have a channel. But now there's like 50, right? And plus the competition. So I would look at the business side of it. What can you sell out of that? Because you can sink so much time building a brand and lose your house, you know? Yeah. So
Awesome. Thank you.
yeah. All right. Well, it's good to see you. Thank you. Nice to see you. Okay, so if other folks would like to come on camera, let's see, what do we got here? Let me put that link up again. Hold on, guys, and then I'll get back to the chat room here in a second. Put that there, and then this goes here. And that's the on-camera link. If we probably have time for another 1 or 2 of those, if anybody's interested. That just showed up in the chat room, I think. Yes, it did. Good. Okay, let's go back to our chat room, actually. How far did we get? Okay, so hello to some other folks. Jeff Brain, Deval. Let's see, we talked to Lisa Maximus. Maximus says, I'm pretty much networking. Okay, well, let's do this, the new trick I learned. Thank you guys for teaching me a new trick. Maximus says, pretty much self-taught, been working very hard. Personal business, how can I get more investors involved or even grow my network? Okay, well, I guess actually we kind of covered that already, Maximus. It's kind of the similar question to Gaurav's. He says, oh, there's a second post here. In the investor community, I'm also 17, so it's hard to get into those events. Yes, well, that's right. The trick there, I think, is probably to find your local university or college. Pretty much everybody has a startup club these days. And I would go and see there. You would fit right in, right? And see how you can get involved in their entrepreneurship program. There are also, since we're on the topic, if people are in places where there are not universities or colleges, there are organizations. There's something called the SBDC, the Small Business Development Corporation, that for those of you who are listening in the United States, that's a government-funded entity, meaning your tax dollars or your parents' tax dollars, that help small businesses, and all of them are looking more and more at high-tech entrepreneurship these days, SBDC. There are many of those offices across the country. You could also look at Junior Achievement or SCORE, Service Corps of Retired Executives. That's another organization. That's for old people, obviously, retired executives. But they have a lot of programs that try to help early-stage entrepreneurs. And just by going to that stuff, you build the relationships, right? And it's kind of like this, but imagine, if we were all pre-COVID and we all lived in the same town, imagine all the people in this chat room in one room, how much you could share together, right? That's a lot of fun because similar interests lead to enthusiasm. And that's the spark that's going to make this world a better place, I think. And that's what these are about, these workshops. So if you want to go to one of those, make sure you get on our mailing list. Michael said, TCVN. Oh yes, Tech Coast Venture Network. They're here in Orange County. That's back to OC's question, I think. OC Dowd, TCVN is a local group. I speak for them sometimes and help promote those. And that's a good organization. Let's see. What else we got here? Okay. Athena, I try to show up at, so Athena has some good advice here. Let's show that. You can read that yourself, actually. Oh, that was a question. Sorry, I didn't see the second part. Okay. Athena, yes, I know you go to events because I see you. You're not ready. You need to build traction. I want to go straight to investors. Yes, feel so stuck. Yeah, that's a common one, Athena. So there's 2 answers here for those of you who feel this way, and it's pretty common. Let me order my thoughts here. One is that not ready, need to build traction is code for 2 things. It's either you don't have enough traction, which means we really want to see some actual revenue, not just traction, or B, we're really not interested, but we don't want to tell you that in case you become really a great investment later that we want to get in on, right? So as usual, don't take this personally, but I wouldn't take that too seriously. I think from what I know of your business, I don't know if you have any customer sales yet. So I think you need to sell some customers or something. yeah, this is probably more detailed than we have time to go into here, but I'll probably see you at an event sometime soon. And going straight to the investors, yeah, let me think about that. Yeah, we need more investor events. COVID just crushed this. Part of this is that most investors are, 40, 50, maybe 60, maybe 70, maybe even 80 years old. And the COVID thing just crushed them, right? I don't mean that they all got sick, but they're also afraid of getting sick, that it really dialed back on face-to-face events, which is really unfortunate for all of those of you who are, of course, trying to get out there and hustle and meet them. Let's see. Okay, so here's the follow-up question. Athena says, there it is, getting on traction, yes. Well, what point is it right time to go talk to investors, or is there no timing? The timing is always, this trips people up. You need to build relationships. So relationships don't come with one-shot visits. They come with repeated contact. So what I would recommend all of you doing, this goes back to Gaurav and a bunch of other folks here, I would really be thinking in terms of meeting some investors, but not pitching them anything. Just make friends, right? And there's a classic saying in this industry, if you ask for money, you get advice. But if you ask for advice, you eventually get money. So build relationships with people that can advise you, and then just keep in touch. Like, it doesn't have to be a two-way street even, but if you have a friendly conversation and follow up with gentle, short, non-demanding emails monthly or quarterly or whenever you've got something new to report, just stay on their radar. And you can build a relationship even kind of one way by sending people emails. Hey, it was great to meet you at the such and such event, or online at the such and such thing, back in March. I know you have an interest in this field that I'm working in. Our company just accomplished this and that. Just letting you know, happy to discuss if you ever want to, see you later. And do that kind of thing, monthly or quarterly. Just remind them, and ideally you have some progress to report, right? You're not just, blowing smoke, but you have something to say on a repeated basis. We hired a new person, we're expanding, we're getting an office, or, this customer signed on, or, I was really surprised we ran this test and the conversion rates look like this, which is better than we expected. You got to spin everything a little bit salesy. It is sales. But that repeated over time is the way to do this, rather than, the media makes it sound like, you show up at a pitch event and you win $1 million check after 1 3-minute pitch. And, those pitch competitions are so often preceded by many rounds of screening and coaching, and the judges on the stage might already be investors in the companies. There's lots going on that isn't necessarily illegal or even unethical, but it's not just magic, right? This is a business, and anybody who's running a startup who doesn't think they're in sales, sorry, you're in sales. This is a sales job. Yeah. Okay. Let's see what else we got here. Shirley Eisenberg. Hi, Scott. I've still got my SiteSell. Oh my goodness. Okay. I used to be I work a lot with a company called SiteSell and promote them. I think they're promoted in those books, right? Shirley, you must have read my books. Well, nice to hear from you. That's really cool. I hope it's doing well for you. That's very cool. Okay. So anybody else got questions? Looks like we're coming up on our hour, but if you have questions or comments, you can add them here. Let's see what else we got here. Wendy, let's see. I think we covered the ones that were sent in. Let me see from the rest of you if there's other stuff we should cover today. What's Hamid say there? I'm currently trying to. Okay, so Hamida has a new. It's an online in-person skill sharing platform. Okay, trying to get skilled people for initial users and honest feedback. Well, great. We'll post the link, Hamida. This is a place that you could do that. I don't know if they're skilled, but they're here, and we'd be happy to. Maybe somebody here can help you out. This is a good topic for everybody. To a good place. Sorry, a good venue to meet like-minded people. Like I said, let me put up our email link again. And let's go back to Annie's question for a second too. The co-founder thing. This is also how you meet co-founders. There's kind of some other fiction in the market that co-founders kind of magically appear, but honestly, you probably know your co-founders, right? Who do you know? And if you don't know anybody, go meet some more people. That's how you find co-founders. This isn't like Match.com or Tinder, although some people have tried building that for co-founders. It's honestly in some ways more personal than dating, because you end up with a co-founder for a long time and they're in your business, right? And you've got to have a real personality match. When I was running these workshops in person a few years ago, I had some friends come in who had done the Y Combinator accelerator program, Bjorn and Matthias, and they came in and gave 10 tips, to founders, sort of thing. And I thought it was very useful because, of course, they had good things to say. But one of the big takeaways for me was that they spent a lot of time dating. I mean, not actually dating, but like spending time with each other. They deliberately spent time getting to know each other before they really, signed all the paperwork and figured out how they were going to split the equity and stuff. And they talked a lot about, who's going to do what and roles. And this is the big thing that co-founder planning often misses, is what happens if things go wrong, right? Everybody likes to think about what happens if things go right, because anybody that does this is an optimist, right? I'm an optimist. You wouldn't be an entrepreneur if you weren't an optimist, right? But what if things go wrong? And it doesn't even have to be, on purpose, right? What if somebody gets sick or has to move across country for a family reason, or gets hit by a bus, like how do you extricate yourself from co-founder relationships is really important too. So there's a lot of thought that should go into that. And I guess I have a couple quick recommendations on that, since this comes up a lot. I was not hiding, not leaving early, but this is a pretty good book, Slicing Pie by Mike Moyer. This can help you split equity up nicely. There's another service called Comparably.com, which I've been told is good. So there's things like that online that you could, use. I mean, this is a book, but there's online tools as well that you can use to try to quantify this, so that each person puts in appropriate amounts and gets out appropriate amounts, right? Because it's a delicate calculation and important to you and to investors, because investors want to know how you're sharing the equity and what your plans are for giving equity to future hires and things like that. So, okay. Well, anybody else? Let's see. One of the problems with this is let's see. Okay. Trying to figure out how many people we still have here. Okay, looks like there's a few of you here. So last call, if you'd like to join us or have any questions I can help you with, let me know. Our next Startup Accelerator, this thing will be on sale soon if you'd like to join us. Not going to be doing one in June, unfortunately. I'll be traveling a fair bit. COVID is over, hopefully, and going to be trying to get out with the family. Okay, so let me just check my notes. So, so yes. Okay, so I guess this is the deal here is I do this for free, and I hope it's helpful to you. I hope you'll tell your friends, and would really appreciate any feedback or likes and subscribes and shares, all that kind of stuff. The big that's the only ask I have here is if you can come and follow us and get on that email list and so forth, so that I know I'm not just talking to myself. That's much appreciated, because this does take some time, and obviously I could be doing other things with my time. This is the website I just put in the chat room there, the LinkedIn for the Startup Council. If you could go over there and follow, that would be awesome. Put in some comments there and tell your friends. And hopefully that's useful to all of you. And I will see you next time. We'll be back. It's the fourth Tuesday, I think, is when we're doing these now. So thank you for coming, and good luck to you as an entrepreneur. It's great to have you here. It's up to you and me and people like us to make the world a better place, because Lord knows it needs some help. And I'm optimistic, as I said. If you're here, you're a doer, and I appreciate you. So go out and do it. All right. So hope to see you again next time, and get on that mailing list so that we can keep in touch. And you're welcome to reach out to me on LinkedIn as well. All right. Thanks, everybody. Have a great day.